Hey guys, AKIL'S here. Welcome back to another Trading Edge video. Got about 7 cool trading opportunities to look at, taking you through all types of cool stuff in the market as always. So let's hop in. But before you do, just want to put on your radar 2 important things that are coming up this week. 1, Japanese elections, which may be super scary and cause some nice little floods in the markets. And 2, the non-farm payroll release that was supposed to come out Friday, but didn't come out Friday because of the government shutdown, is coming out Wednesday. I need to double check that somewhere before I say it. Yes, Wednesday, I was correct. Never should have doubted myself. But those are the 2 main things fundamentally that are scheduled to potentially rock the markets this week. So just keep an eye out for that. All right, let's hop into the charts. The Aussie yen has been an extremely interesting pair. We've had a few opportunities on here which have been really great. But it's interesting because as the chart that I hopefully edit and show in front of you shows, if I remember correctly, the Australian dollar has been pretty much the strongest pair in the market. The Japanese yen has definitely been the weakest pair. I don't know what the universal sign for weak is, but I can't even lift this pencil because I'm so weak. That, right? Anyway, before I get into the new opportunity, I want to show you what we've looked at here. We've had a few different opportunities here. One, we've had a butterfly pattern. I'm going to measure that out real quick for you, right? Tier 1 traders, you probably remember this. We had an X to A, swing high to swing low. We had an A to B, we had a B to C, we had a C to D, right at this 127 for our butterfly pattern completion, and that thing ran right down. Then we had a trend continuation opportunity as well because, well, one of the cool things about the butterfly, cool or frustrating and nerve-wracking things about the butterfly, is that the decompletion comes after a violation of the X leg. So this is also what's a little bit weird about the butterfly and why I have this love-hate relationship with the pattern. Although the butterfly is a short opportunity, the overall analysis says long, and the short opportunity is banking that you're playing a little bit of relief from the long that happened before the market kind of gives us some relief before another long is going to happen. Hence why I don't trade the butterfly. But trust me, it makes sense if I actually took time to explain it to you. But anyway, we have this higher high, higher close. So we have that bullish, where's my bull at? We had that bullish bias, bang. We had our relief, which is nothing more than a pullback. And then in our relief, we got one of my favorite entry setups, a 3-bar reversal. High momentum bearish candle to the downside. Rejection candle right there. Again, it's a rejection candle because of the wicks. You can see price action, or the sellers, I should say, pushed it down, 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 down. And then the buyers came in and said, bang! No, right? And pushed it up, 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 up. And then we got confirmation with the next candle giving us a higher high, higher close. So closing above the previous day. And then boom, we shot to the moon and the rest is glory, right? Money came falling out of the clouds. So now what's next? Because this is all good AKIL, but it's over with. So why are you sharing this with me? Well, because this is a perfect example of, yes, this happened. It's over. It should not affect our analysis at all anymore. So what we have to do is we have to reset. So for me, I have a 3-step process to resetting, 2-step process to resetting. 1 is I click my right mouse clicker. There we go. 2, I go down, this is a 3-step process. 2, I go down to my remove drawing tools tab thingy label. And 3, I click my left mouse clicker. Haha, and it disappears and everything is reset. It's like it never existed. So I reset my IPDE process and I start with my I. What has price action done? Well, I identify that we have broken and closed above this level. Normally what I would do if I didn't want to make this a super long video is I would go back in time. I'll do it anyway, right? Let's go back in time so I can show you that nothing exists up here in the history of life for a very long period of time. Maybe I'll put some cool music in the background to show you my journey. There we go. Nothing has existed here in the history of life aside from back in like 1989, right? So we definitely have room to continue to the upside. I'll actually draw this in so I can give you an idea of where the next level of structure may be at. Let's fast forward or snap back to reality. Whoop, there we go. And we can see that between the level that we have violated and that next level of structure from back in 1989 when young Akil was 4 years old and doing, not trading, I can tell you that. What was I doing at 4 years old? I don't know. Playing sports, action figures. Playing with He-Man probably. I don't know. Anyway, the point is that we have room to go higher. So what we're looking for here is another trend continuation trade. Again, 4 hour, 1 hour, whatever your preferred time frame is. Look for either a breakout of this little consolidative level that we've put in, right? We've kind of lost steam as we've gotten to the end of the week, Japanese election, so be careful of that. Either wait for the breakout of that high-end tightish flag that is forming, or of course, wait for any type of fresh break. So the cool thing about this is, when I look at this, what I'll do is I will draw out this zone, right? I'll literally have my, as I'm doing right now, my little things drawn out. I'll even draw it like a big box like that. And I will say that I expect price to go from here to here. And the thing is, a lot of traders get in trouble due to FOMO. We did the podcast the other day, which talked about the dangerous first hour of trading, right? A lot of that is FOMO. You guys actually, as I revisit the poll, I thought that you guys would say the most dangerous time of trading for you was the first hour. However, the poll came back saying that the most dangerous time of trading for you was the last hour. And many of the comments below that said, yeah, because time is running out and I don't want to miss something, so I just got to getting something right away. So what happens in situations is like this, is that you see this and the market like goes up and you're like, oh no, I missed it. What am I going to do? And then you get in late. But remember, this thing or your prediction is going from, said price right here at 110.31 to said price up here that I don't even know how long it is because I can't get up there, 112.48, right? You've got plenty of pips available. And the market in general, and again, I'm probably jinxing myself, right? Generally, the market won't just go straight up that many pips. It will ebb and flow. It'll give you an extension, a pullback, an extension, a pullback, an extension, a pullback, right? And each time the market gives you an extension and a pullback, right? A fresh break and a pullback, this is a buying opportunity. This is a buying opportunity. This isn't a buying opportunity, right? Or this is a buying opportunity, excuse me. So the point is, I don't want you to freak out if you miss the initial move. Stay patient, stick to your guns, and there will always be new moves to come. So let's take a look at the dollar yen. And you can see we've had a nice little rebound after last week's video from these lows. And the question I'm going to ask ourselves is this move done, or is there still room to go higher? Now, from a higher time frame perspective, the level that I would anticipate price action going to, if I wanted to draw out a vague zone just for starters, is going to be this level right here, right? You can see this is a level where price action kind of moseys on up, retraces a little bit, moseys on up, and then drops down. We're gonna get more specific with that level a little bit later, but just wanna start off with the broad strokes. As we go down to the 4 hour time frame, I actually wanna bring up a really good lesson. We had this in the live trading room this week where we were doing our daily predictions in the live room, and traders were predicting stuff. And we took a look at the euro dollar, or the dollar yen, excuse me. And I think it was right around here. Yeah, this candle right here. And I asked you guys, hey, what do you think? Blah, 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 blah. And one of the traders responded that, hey, I think we're going to go down, or we have to go lower. And I said, well, okay, why? Let's expand on this thought. And they said, because the RSI was overbought. And it brought us to a really good conversation about what the RSI actually is. That's that indicator at the bottom of your screen, and how essentially what it is, it's a strength indicator or a volatility indicator. And despite one of the common uses being when it goes overbought, look to sell. When it goes oversold, look to buy. Oversold and overboughtness actually means that there was a lot of momentum in that direction. And not to make this into a whole thing about the RSI, but for newer traders out there, I would just give you this warning. Do not sell every time the RSI goes overbought. Do not buy every time the RSI goes oversold, because it can remain in those overbought and oversold conditions for very long periods of time. And here's a good example. Again, we initially went overbought right here, and after 2 candles to the downside, price continued to go higher, a couple hundred pips. So just be aware of that and always take time to kind of get to know what your indicator actually indicates before just blindly trading. And not saying this trader was doing that, but just as a warning. So let's take a look at what's happening with dollar yen. We have ventured up from $1.52 or 152, I should say. And we've gone into this little bit of a consolidative period to end our week here, right over the last few days. And the question is, how do we want to react at this period? Is this a place that we should expect price to go lower? Is this a place that we should expect price to go higher? Or should we just bracket the market and do both? Now, I do think bracketing the market is a good idea. I do think if we take out these lows, we're likely to go a little bit lower. If we take out these highs, we still have room to go higher. For this video's purpose, I want to focus on the upside. And I want to really dig down in this zone and see if I can get more specific with where in this zone I think price is likely to go to. And if you're someone familiar with my work, if you are a live room member, you know exactly what I'm going to do. I'm going to do the noise. I'm not going to do the noise, right? Because you guys make fun of me. But what I want to do is I want to identify our elephant candle, which is going to be this big red one down here, the one that really kicked off this high momentum move to the downside. And I want to isolate the consolidative zone prior to that level, which is going to be right in here. And that's how I'm going to take my bigger zone and squish it down into a smaller, more precise zone. Now, that's not the only thing I want to do, right? Because again, over the last few years, I've implemented something in my trading that allows me to get more confirmation, more confluence in my analysis, and it's really helped with kind of target projections or even entry projections. And I even did a whole video on it that you can watch if you want to learn how to use it. But that is going to be my anchored volume profile tool. I want to drag it from or really just click it because it's the anchored one, but drag it from our swing high to swing low here and see if there are any clues that I indeed chose the right level. And you can see that there is. If you're new to the channel, I look for what's called the void, which means kind of gaps in the volatility, so areas like that. And I believe that price will slice through them like a hot knife through butter and then be magnetically gravitated or pulled, I guess, to that next level. And our next level and our highest level, seen by our point of change, this little small white dotted line here, is going to be really that exact zone that I drew out. So if price is likely to go higher, meaning that we can break and close above this yellow line right here, which is what, 157.34, then I think we're likely to travel up to 158 flat. So something you can look for here in the 4 hour, or if we're going to get more in depth, go down to an hourly chart. And then my personal style is a break and then a pullback and then a chance to trade it higher. Of course, if you're more aggressive, you can just trade a breakout as well, meaning once price gives you confirmation of the break and close above this level, I guess technically you don't even have to wait for the close, but the break of that level, I would wait for the close, then trade it out right away. So that's a good buying opportunity here on the dollar yen. I definitely think there's a little bit more room to go higher. Oh, Canada, we spoke about you last week and price has come up into that level that we were interested in. This is going to be the dollar Canada on the daily chart. And speaking of candles de elefante, I don't know if that's the correct way to do it, but it sounds cool. We have just been magnetically gravitated, if you're still laughing at me from a while ago, to that same level right here, right? Price has given us a lower low, lower close. We have another lower low, lower close here, and we have some structure that we actually ran into there. And now we've retraced back to this level where price is giving it a little bit of a think. So let's go down to the 4 hour chart and see what we have here. So with Canada being at a previous level of structure, I'm not too interested in longs yet. Once again, I would need to see a break and close above the highs of that zone in order to be interested in longs. We have not done that yet, so I don't care. What I would be interested in, however, are potential shorts. And in order to confirm that interest, I would need to see a break and close below these lows here at 136.24. So if price action can violate that yellow line to the downside, I would fully expect us to retest our previous structure lows. And honestly, we may have room to push a little bit lower. Let me just bring a Fibonacci extension on from our swing high to swing low right here. Because remember, I did tell you that we broke and closed below our previous level of structure and our previous level of outside structure here. I'm curious to see where this 127 extension lines up with that lower level of structure. I think it's going to be below, which wouldn't be a good projection for me. Ooh, right below it. But we do have room to go a little bit lower here. So you could look for an extension as well to the downside, which would bring us to about 134.34, or maybe just call it 134.50 to play it a little bit safe. So that's available as well. I'm not that ambitious to shoot for that extension, seeing how there's not too much room below these lows, but I would certainly think that we can retest these lows if we're able to break and close below this level. This may be also something that turns into a head and shoulders as well, right? You can see kind of part of it is there already. We got the extended move up, we've got the retracement, we've got the really failed extension or really minor extension. We've got to move back to the neckline. If price action were to come up here, this may give us a head and shoulders pattern as well. Of course, with the confirmation of that head and shoulders pattern being at the violation of the neckline. How would you trade this? Well, the same way you would trade the break if it weren't a head and shoulders pattern, right? See, I like to keep things simple. Breakout traders just wait for the breakout and trade it lower. Pullback traders wait for the pullback, wait for the extension. Wait for the extension, wait for the pullback, and then trade the extension downward. Speaking of extensions, we have a potential extension trade here on the pound Aussie. Let's take a look at what price action has recently done. Let's identify our most recent level of structure. You can see a break and close below, and even more recently, if I take kind of the move right here, how we ended the week, lower low, lower close up there. And you can see that we are in the middle of structure, but we are not at the lows of structure, right? So price definitely has room to continue lower. I'll draw a little bit of a zone. Oh, nope, wrong tool. I'll draw a little bit of a zone down here, but price definitely has room to move lower a little bit on this pair as well. So for this example, what we're going to do is we're going to go all the way down to a lower time frame, right? And this is something that maybe an hourly trader or even a day trader may want to look at when the week starts. But let's go down to not just a 4 hour, but let's go down to a 1 hour chart. And you can see what has happened here. So on the 1 hour chart, we've had this little bit of a blip, right? Prices come here, we've kind of gone that, we've kind of done that. What I would love to see here is, did we break and close? Let me just see if we broke and close here. We may need a fresh break, we may not. Our low of this little doji candle is, if I look right, 193.75. Our lowest close here is 193.75. Yeah, so what I would like to see here is a violation of this low. Once again, broken record alert, right? Violation of this low. A pullback into this zone, right? Previous structure support becoming resistance, and then looking for a continued move back down into this 193 even level. And again, this is something that will probably be available on the hourly, or for you day traders out there, going down to your 15-minute, going down to your have a range bar chart loaded up. I can find a range bar chart somewhere. Going down to your range bar chart. Let me steal it from over here. There we go. What is this, pound Aussie? And seeing if, what's this, 11 range? Seeing if this offers an opportunity as well on the range bar chart. Ooh, look at that. Hold on. I'm getting distracted, but I'm sorry, guys. Ooh, pattern formation. Look at that. Already completed. This would have been a nice excuse to get involved. Stop it, Akil. Stop it. But X to A, can't help myself. X to A to B. B to C, C to D right here. That would have been an awesome way to get involved. However, it hit targets and is already coming back up. Anyway, look for that fresh break on the range bar charts as well, and there might be something there too. So here in the pound yen, we have a very similar example, but I'm actually looking at trades on both sides for this particular pair, the long and the short side. And this is a good example of how we need to be not adjustable with our rules, but how rules for violation need to be adjusted as price action gives us clues. So I'll walk you through it. If we look at our previous outside level of structure, that's going to be right here. And as price came to that level, we broke below, but we did not close below. You can see that green candle right there. What happens when that happens, right? Probably should have put a comma in there, is that this low now becomes the new watermark that needs to be violated in order for price action to technically give us a lower low, lower close, right? I know it sounds kind of weird, but this is kind of the maybe the small downside of having rules, right? We put rules in place to keep us consistent, right? We want black and white rules to keep us consistent. However, sometimes within the black and whiteness of those rules, because the market is like a wild, untamed beast, it's not meant to follow our rules. It's kind of like those people that like have pet tigers and stuff like that, and they get mauled to death, where it's like, yeah, a tiger is cute, but tigers aren't meant to be domesticated. So you can train it and give it a cage and all this stuff, but at some point its animal instinct may come out and it just might maul you, because that's what tigers do, right? I'm sorry to all you tiger lovers out there, but that's what I've been told by the internet. So rules are the same way, where 99% of the time they work and they make sense and they keep us consistent, but there's always that 1% of the time where it doesn't line up with your eye. And this is one of those times you're like, well, Akil, it clearly is trading lower. Yes, but it technically didn't break and close below, so no. So then on this 2 candles later, on this red one, we once again create a lower low, but we don't break and close below. So that needs to be our new low watermark. So now, in order for this level of structure to technically be violated, we have to violate that level right there. Now, luckily on the very last candle, we do violate that level. You can check the numbers. It does it by like 2 pips, but we technically do have a lower low, lower close right here on this red candle, which gives us or finally confirms that bearish bias. So we do have a potential bearish continuation trade setting up there. However, we also have a bullish trade setting up as well, and there are a few clues here. One, after a very sharp drop, right, you can see that the slope of price action has started to decrease. So this is pretty much straight up to straight down. This is pretty much kind of a little bit sideways, right? And this is called a loss of momentum pattern. Typically, these are signs of price action getting ready to give us some relief. So in this case, the bulls may be kind of getting involved a little bit because more bulls or new bulls are interested and less sellers are interested because they've already made so much money on the way down. So we have that with our RSI as well in the form of divergence, where again, price is putting in consistent lower lows, but hey now, look at that, our RSI is starting to drift the other way. So it's doing something different than that. That's called divergence. Now, as you go down to a lower time frame, the 4-hour chart, we're gonna see some nice consolidation here, right? Price action has pretty much come down, and we've bounced up, we've bounced down, haven't violated, we bounced up, we bounced down, haven't violated, we bounced up, we bounced down. Now, for the trader looking to get short, remember I told you this was a kind of a double opportunity. What we need here is we need a fresh break. So we want to identify our lowest point, which is right here. And if price action can take it out, right, we can look to trade lower. We talked about this on many opportunities over the many videos we do here on the YouTube channel, but I know people are new, so I'm going to explain it again. By the way, if you're new, make sure you subscribe. That way you don't miss all the cool content I put out. But my personal style is after we violate a level, wait for a pullback. It gives me a little bit of a cheaper price, and then look to get involved on the extension by trading it at the pullback instead of just trading it on the breakout. There's one way isn't better than another. Breakouts are a more aggressive play. This is a more conservative play. What you have to do is you have to kind of find your own style. By the way, I forgot who gave me the comment, but I really appreciate it. Someone commented under the last video, said, Akil, one of the things I love about your videos is that you do give different options on how to trade. Many videos on YouTube are just like, this is my system, this is my way to trade, this is the only way you can trade. If you do anything else, you're stupid. The reality is, like, trading it's a journey of self-discovery. The best traders find a trading style that meshes with their personality. All of our personalities and philosophies are a little bit different in the market, so it's only right that we trade different ways. And ultimately, right, it doesn't matter how you trade. Even the traders I work with, I tell them I don't care how you trade, as long as you're following a few core principles on the business side of trading, and of course, as long as what you're doing has an edge and can make profit, then go for it. So that's how we would attack the downside here. The upside is a little bit different, right? We're going to go one more time frame down, and again, remember we have a break and close below, so we have that bias, but you can see here on the hourly, we have a double bottom, right? A double bottom pattern right here. So maybe if you're someone that doesn't use the daily as a higher time frame, you can already look at this as a tradable double bottom. You probably got you did get the cheapest close you can possibly get, right? This would be your entry right here. Your stops would be below whatever the ATR is. I don't feel like measuring it out, but you can do it on your own. But this is a really, really cheap buy. If you're someone that does have that bearish bias and you can't trade a double bottom because your bias is bearish from your higher time frame analysis, what you can do is, right, similar to what we spoke about with silver, is wait for price to take out these highs. And if we take out these highs, wait for it to retrace back and then look to buy it up there. And that's going to be your 26.18 opportunity there as well. So a few different options here with the pound New Zealand. There is short options for continuation traders, and there are long options for aggressive counter trend traders, and then there are long options for more conservative counter trend traders. Everyone's got something to do here. So now it's time to get into some of the viewer requests. We're going to pick two of them, the two most popular ones that you guys gave me from social media this weekend at the time of recording this. And one's going to be on gold. Akil, what is happening on gold, or what is available on gold? So we know that gold had to crash to end last week. We know that gold's been on this massive run, so it's only a matter of time. My expectation in gold, aside from any weird war news that comes out from all the threatening Trump has been doing or whatever else is happening in the world, is that we're probably going to see a little bit of a consolidation period, right? We've been in a bullish run for a very long time. It's only right that maybe we revisit some type of consolidation as the market figures out its mind. And consolidation offers great opportunities for advanced pattern formations, and that's exactly what we have here on gold daily, or maybe head down to the 4 hour to make it a little bit more clear. So as I zoom in here on the 4 hour, right, we're gonna see a very beautiful potential advanced pattern formation. My starting point is gonna be here, and my first step is I wanna measure with a Fibonacci retracement from my swing high, which will be my X, to my swing low, which will be my A. I wanna measure what Fibonacci retracement level that B leg comes to. I'll label these out later for you to make it make more sense. You can see it comes to a 50% retracement. That's going to put me on alert for a bat pattern. So when I look at this in whole, my first swing high to swing low, my X to A, my second swing low to swing high, my A to B, my third intermediate swing high to swing low is my B to C, and if price action were to come up to our 886, that would put me on alert for a potential bat pattern. And you can see that's going to be a zone that rests right at the highs, where I certainly would expect another think to happen, meaning that if traders are buying it up here, I would think that there'd, one, be some sellers interested in this level, and two, some buyers that are a little bit cautious. We always get a little bit cautious around new highs that may want to take a little bit of profit off the table. And just remember, with advanced pattern formations, we're not expecting the market to move from here all the way down here. We would literally, be expecting price action, oops, wrong tool again, price action just to move really back to this level right here. So a retest of the B leg essentially. Now for you guys that want to dig a little bit deeper and get a little bit nerdy with advanced pattern formations as well, we have another one at market currently. So if you're looking for consolidation now and not in the future, we actually have a cipher pattern which completed at the end of our week, right? This first move, swing high to swing low, is our X to A. This is our A to B. Our B to C was down here, and our CD completion completed right above that B leg right there. So the zone of our cipher is going to be from our D leg to our X leg right up here. You can see we're clearly trading in that zone already. So a bearish cipher is already in play here on gold. So our final pair and our second viewer request comes on the New Zealand dollar, specifically the weekly and the daily chart. And you can see here on the weekly chart of New Zealand dollar, we have another advanced pattern formation forming as well. Once again, our starting point up here is going to be our X. Our low down here is going to be our A. We bring our Fibonacci retracement on from the swing high to the swing low, measure out that Fibonacci retracement, and we can see that price action this time has come to a 618. So whereas a 50% puts us on alert for a bat pattern, the 618 puts us on alert for a Gartley pattern. And for the Gartley pattern, I'm looking for a completion at my 127 Fibonacci extension right up here, and that zone existing to our X leg right up here. There are alternative ways to draw out Gartley's as well. One way would be an AB equals CD pattern. That's probably going to give you a much lower entry. Look, right there. You could do that as well. To each his own, all depending kind of the rules that you want to follow. So if price action were to continue up here, we would have a nice potential bearish Gartley, so a selling opportunity right at that level. Certainly something you can keep on the radar. In the meantime, we can also see that price action has stalled at our B leg, which means it has stalled at a previous level of structure resistance. So as I go down to the daily chart, we can see that we had a little bit of a reaction off of that already, a pullback. Now, I have no reason to expect price to continue higher because we've held structure and we haven't violated structure. So my thought process is this: Akil, and yes, I talk to myself, it's okay. Trading is lonely, and although I have my live trading room buddies to speak to on a regular basis, it's only a few hours a day. So those other hours, I just talk to myself. It's not weird. Everyone does it, right? Yeah. In fact, as soon as I'm done recording this, I'm gonna create a YouTube community poll question, right? So go over and answer it. Do you talk to yourself during trading? And more importantly, do you answer yourself as well? But anyway, so if we are going to continue lower, a level that really stands out to me is that 5850 level, and I'll show you why. If I just take time to kind of draw in the recent ebbs and flows of price action, I'm going to draw it from here. And this is, again, a good trick that I recommend, not a trick, a tactic that I recommend all traders do if you're learning to read price, especially structure. Draw in these ebbs and flows. And I want you to see if anything kind of stands out. This one doesn't mean so much down here, but do you notice any tendencies? Well, right, we have a lot of these ebbs and flows completing at the same area, right? 1, 2, 3, 4, all in this zone, right? This is probably going to be a pretty important zone, right? And again, structure acts like a magnet. I would expect price action to be pulled towards this level next. Now, I can tell you right now that I don't think there's going to be any volume at this level just because of the amount of consolidation that we've had, but let me just kind of measure that in. Yeah, you can see not really any changes in volume. It's just, it's thick everywhere, right? But we can bring in some Fibonacci's and maybe there's some confluence there. So I'll start with a big Fibonacci from my swing low to my swing high and see if there's anything in there. We got a 50% right at that level, 382 a little bit higher. Let me draw the Fibonacci retracing from my lower level as well. And you can see there's a 618 in that zone as well. So again, that 5850, I think that's a decent level to shoot for. With that being said, I would still like some proof because I am a conservative trader. We can see that price action already spiked back. So what I would like to see is a violation of these lows, price action to take out these lows one more time, and that way I can look for a pullback and a move down. However, if you're someone that is a little bit more aggressive and if you're able to go down to the hourly, maybe this is the pullback that you're looking to take advantage of. Let's see what that looks like on a 4-hour, I should say. Yeah, maybe this is the pullback that you're looking to take advantage of as it comes into this previous level of structure, as it gives us some hidden divergence, which means that price action is putting in lower highs, right? High number 1, high number 2. Number 2 is lower than number 1. However, our RSI is giving us higher highs, right? That's called hidden divergence. It's a different way of looking at divergence, which I recommend not doing if you're new because it's going to mess with your head. Remember that picture I showed you last week, and I'll probably put up again, where I had my trading computer with my rules printed out in the background? Well, when I first learned about hidden divergence, because I was so accustomed to looking at a very specific side of the RSI for a very specific reason, it was very hard to train my RAS to notice hidden divergence. So for probably about a year, I had a chart up, and I could probably find it when it was a Google chart. I had a chart up on my wall just so I can make sure I'm looking at the right side of the market. So if you're someone that finds yourself struggling with hidden divergence, you are not alone. Trust me, it is very difficult to find. Or rather, not difficult to find, but difficult to train your eyes to see if you're used to seeing something the other way. Regardless, those are signs, positive signs for a continuation trade. So if you were to get an entry reason in this level, this is also a nice little pullback trade that you can use to take advantage of that move down to 58.50s. So I hope you enjoyed the video. Before you go, there's two things I want you to do. One is to like and subscribe, all the stuff that I tell you each and every week. That way you don't miss all the cool stuff I put on the channel. But two, I would love it if you shared a trading idea that is on your radar for the week ahead. Again, I really want to grow this YouTube community. I don't just want it to be me sharing my ideas because my ideas are only my ideas. I love it to be a place where people can come in and see other ideas that traders have as well. So share your top trading idea below, be as detailed as possible, and I will see you next time I upload a video, which is gonna be very soon because there's a new video episode of the Trading Coach Podcast coming out on Monday. And now that I said it, I have to do it. Accountability.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is